Japanese value. Japanese value, EWJV, is the strongest of the signals on the ETFs in Japan. So if I add to that, that's where I'll be adding to it, because I add to where there's signal strength, I subtract to where signal strength is coming off. We already reminded you that India has more signal strength now by a considerable margin versus Japan if you're looking at them straight up. And of course, our shorts are looking fantastic. We're short EWH, which is Hong Kong. So if you're, Japan's a larger position than my short position in Hong Kong. I also have RSP, IWM, SPY. You can go down the list on all my shorts. So we have plenty of shorts. But this was down a lot last night, Jonesy. The Hang Seng opened. The locals in China are not trading stocks because they're still in the Golden Week, but closed it on the lows, down almost another 3% on the session to new cycle lows, and obviously that can hedge out some of your Japanese immediate term trade risk. What else we got going on? All of Europe. I mean, we're short that. That should be a hedge that you're doing pretty well with. EWO, I covered some of that in real-time alerts yesterday. UAE's been a good long. On the long side, we don't have many equity asset allocation. That's good news, right? I mean, we're not wearing the bags that everybody else is, but we do have what we have, and we're going to talk about those things. But please don't populate the talk about crying wolf. People crying in the queue about things that don't work every single day. UAE's working. I won't get any questions on that, thankfully. Up 2.8% actually in the last month, indeed. Higher low on oil. We got 87.78 low into the risk range. So again, I hit the button in USO yesterday. On USO, that's different than WTI or Brent for that matter on the risk ranges. It has its own risk range, and I traded accordingly. So just to be clear for those of you that are new to the process, how about that price of beef? Where is the beef? Look at that. So the dude in Europe this morning wakes up, Jonesy, and he says, ECB guy. The ECB guy says, European Central Bank, we have a problem with the food price. They're calling food what it is, which is a problem. In America, oh, it's great. Inflation's coming down, according to Powell. Bullshit. Where's the beef button? There you go. Talk about orange juice, beef, sugar. What do you want to talk about? I mean, let's just stop talking about bullshit while the bond market blows up your bluff. Okay, so just something to highlight there. Butter yesterday. We're talking about the butter. Who would have thunk? What else? Big higher low on the 10-year yield risk range at 439 indeed. Already talked about that. FXC, there's one, Jonesy, where it went from bullish for like 2 days, back to neutral to bearish. So what did I do? Can you stop going down? No, I sold the whole thing, right? Sold. In Macro Pro yesterday, sold all, it says, okay? It's bearish trend now. That's what it says. That's what you do. It's called a stop loss. Okay, and I didn't lose a lot on it. That's the point. Lose a little so that you don't lose a lot, and stay with your full investing cycle position. So that'll happen pretty often, Jonesy, where, I should say pretty often. It happened in Vietnam, for example. Oh, look, Vietnam, by the way, now is down almost 10% from where I sold it. So I lost 1.5%, but I could have lost 11.5 or 12%. Okay? Never do I get any thank yous about this, and I don't need to be thanked, right? But the fact of the matter is it's part of the process. Again, taught to me a long time ago by my dad, take little sips, they hurt just as much as the big sips, okay? So, there you go. Take a little loss, but better than a big one. Good spot to take some questions.
Well, I think you can guess this, the number one question, what it's about. But I don't know. I think we already have talked about oil a fair amount, so.
Well, I'd just like to know what it is.
The entire energy complex from oil tankers to uranium to coal and beyond collapsed today. What's the thinking?
Have collapsed?
Yes. They're talking
See the words, yes. They've collapsed. Okay. I knew we'd eventually get there. I mean, I have a live quote of crude. It's up. Is that collapsing?
Yeah. Maybe talk about.
No, isn't it? We need to go back and change some of this behavior. Anytime something goes down, it doesn't mean it's collapsing. It's correcting. And actually, oil's up. So, I want to improve your ability to succeed at this game. I've thought about this moment a lot. Because some of you are like, he's too mean to me when I ask these questions. No, you're asking stupid fucking questions, right? You're saying, the preface of the question, oil's collapsing. No, it's not. It's up. Oil's up, Keith. You bought some yesterday. That's the way the question should go. Or, hey, how do you think about oil within the context of an economic collapse? That could be a way to think about it. But to start the question that way, I just don't think I just don't have it in me, right? I can't pretend that I'm not, you know, there's not enough dollars in the world to pay me to be polite about that. Because it's just a mischaracterization of what's going on, right? What's collapsing are utilities, okay? So, enough of it.
Okay. So you said 78% of stocks were down yesterday. Only 10% of stocks are above, their moving averages are intact. To what extent?
What I say was intact?
I think you said only 10% of the day moving averages are
Yeah,
intact.
11% of the S&P 500 is 50 days. Stocks are above their 50 days. So even to the moving monkeys, it's getting dangerous.
I think I know the answer to this, but do you ever look at data points like that and think, okay, this is a contrarian indicator, like oversold or whatever? Because I think it's actually a good learning moment for me, because I often have looked at this stuff in the past and been like, well, it's at such an extreme now, it's got to balance. But I think something you say a lot is things crash from oversold levels. Right?
Yeah, I mean,
which is something you got to keep in mind.
No, I don't look at their indicators, and because their indicators have gone bearish, say that that's a contrarian buy signal, because I don't use their indicators to buy or sell.
Yeah.
So no. But what I do is what I've done today, which is I look at all of it, not just the 50-day moving monkey, and I pull out the divergences, which is why it's such a dangerous day, right? So what did I say this morning, Jonesy, right? I said, okay, look, if you look at one IWM, which we're short, minus 1.6%, minus 12%. This is like since August 1st, and this is yesterday, okay? Yes. Okay, that's 12%. Right? 2, RSP, the equal weight S&P 500, minus 1.1% yesterday. 3, SPY equals 0.0 yesterday, because 7 stocks were up plus 2. 7 stocks, right? So I look at that, and I look at all that, and I look at my signal on these 7 stocks, and 5 out of the 7, or at least 4 of the big ones, Microsoft and Apple in particular, are bearish trend. So I was shorting Apple yesterday. I can't short Microsoft because Ami covers it, right? So this is what I do, Jonesy. I start to go deeper into, okay, what are the things that haven't gone down, because this is economic gravity, and why wouldn't they go down? I mean, I'm old enough to remember that the last bull case on the magnificently manipulated 7 was lower interest rates. So, I'm looking deeper. If you take this again, I look at the baskets. Okay, if you look at yesterday's action, forget what I just said for a second, because that's like so headline in nature. Did you know that the most short basket at Goldman Sachs, minus another 3.5% on the day, right? Short's getting squeezed. Not anymore. For going on 7-8 weeks now, shorting shit has worked out wonderfully. So that's working into a recession as it would. Number 2, no profit technology, no profit for you. So remember the time when we had a banking crisis and these banks were going under because they had profitless clients? Well, that's still the case, right? So this basket yesterday, Jonesy, was down 1.5%. Again, 3, not what the SPY did, or 7 stocks. So when I look at the number, like all I've done so far is I go through my process every single day the same way, in the same order, from 4:30 in the morning till whenever I go to bed at night, and I get through all the options data. I never look at, this sounds or feels like a contrarian oversold signal. No, I actually have the red eye on, and I'm short. So that's what I think about that. And if you don't like being short, then buy some of our longs. If you don't like our longs because they go down, then don't buy the longs. Lots to think about there.
Okay. This is part you may have spent.
Oh, here's another one. One more sort of recent IPOs. This was a bubble too. That was born out of July. IPOs. The Goldman IPO basket was minus 1% yesterday after failing at my trend. So I shorted IPO. That's an ETF called IPO. That's another factor exposure that the street is way too long. Did you see what happened to Instacart yesterday? It was down 8%. These pumps are royal dumps. I mean, we had a great tweet, Ethan, from I think must have been Dan Holland, where Dumb and Dumber is sitting on the can. I mean, this is terrible what's going on in a lot of these things. And again, it's points in time like this where people might get too bearish, but like you said,
Yeah.
markets crash from oversold levels.
This is number 3 question from Margaret in Maryland. Maybe this is sort of what you've already been talking about today, but she asks, in one of the RTAs from yesterday, you referenced the weakest links in the market. I think maybe this is the stuff we're referring to, but she's asking if you can expand on your thoughts from that RTA.
Yeah, I just did.
Yeah, I thought that too.
A whole bunch of those. Thank you for that question.
Yeah.
That's a good question.
Yeah.
Very good question. Excellent question. Phenomenal question. I can go both ways on that. Hey, did you notice that oil's collapsing to up 0.4% now? On the day.
Okay, any flags or call-outs in today's implied and realized volatility table that's actual?
Yes.
I noticed that premiums building, a lot of dynamics in the volatility market.
Okay, so let's do another one of these OODA loops. Do you guys like it when I do that? I can hear you. Yes, yes, yes. Let's talk more about these things, Keith, because these are not the questions that are being asked about the old wall. We do not, in OODA loops like this, when we re-enter crash mode, the Russell 2000 is cleanly in that. Obviously, a broadening base of stocks are crashing and collapsing, and sectors that people haven't seen crash like utilities since 2008. All right, so you need somebody standing on that hill that's had experience going through this before. Every single time we go through these things, they have different components. Okay, so when you look at that implied vol table, just show it quickly. The 2 big callouts would be high yield and Tesla. Okay, because they're the 2 reds on the board. Okay, so some of these things are not like the other. Some of these things just don't. No, actually they do belong. Okay, 1, Tesla. This is a real interesting one because it's part of the 7. So it's part of the return yesterday, the 0 return, by the way, the S&P. That's the new. It's great. Oh, we didn't lose money today. And by the way, the S&P's been down for 4 weeks in a row, and it's going to be down on the open. So this thing was actually down on news yesterday, right? So you had news out on Tesla on deliveries, which was worse. We're pretty bearish on Tesla, and it was worse than our number. Okay, stocks down on news, and then magically, as soon as they put that buy order in for the 7 stocks, the thing went up on nothing but the flow. Again, I run $1 trillion. I sell $100 billion in my fixed income mistakes, and I just buy those 7 stocks. Well, does that mean that the news of Tesla deliveries, the mismatch on inventories and demand, has gone away? No, actually not. So, that's a real interesting dynamic inside the hood as well, and it has an implied volatility discount this morning of -2%. Okay, so people are scared to short Tesla. Right, this is the number 1 place where people chase. Right, I've always called Elon and Tesla the center, at the center of the mother of all bubbles. Everything about it, he's emblematic of. Yeah? Okay. So there's an implied vol discount there of 2%. 2, HYG's got an implied vol discount this morning. And it's had one. But again, what is the complacency in the bond market is actually that high yield spreads will stop widening here. Right? They don't have the view that I've had on high yield for 21 months. Just stay with it, stay with the cycle, right? So they think that eventually they'll get their JOLTS report or they'll get a bad jobs report, bond yields will go down and the high yield will go up. Well, the high yield starts to pick up, it doesn't just trade on rates, right? What's happening here is that high yield trades on 2 things. It trades on, yes, rates, the direction of interest rates, which we've had dead right, but it also trades on credit. So if we're about to enter a recession in T-minus no more weeks, because it's October, guess what happens? I mean, the bankruptcy cycle week slides 103, 104, 105, I think, in the deck. Steiner was highlighting this morning. The bankruptcy cycle is accelerating right now. That shouldn't surprise anyone. The cost of capital is going roof. Okay? So these 2 things, Jonesy, on implied vol. Good question. When I look at the data, I see a lot of things that I don't talk about. So I hope you can empathize with me when I get a stupid-ass question about oil collapsing, that I don't want to waste your time with that. It's not about me being an asshole. It's about me saying, hey, there's so many better things you could be asking about, right? I might cry. I mean, this is big stuff. Tesla and the entire junk and high-yield bond market? Let's talk about that. That's what matters today. That's what I'm going to go and execute on. I'm not going to sit there and say oil's collapsing when it's up.
All right, we're coming in on 9:30. I think we're going to wrap it up there. Have a great day out there, everybody. Back at it tomorrow at 9 a.m. Take care.
believe that. That was not a tip, by the way. Top 3 things this morning in the notebook. Let's just get into it here this morning. It's actually going to be oil first, then interest rates, and then just nasty dog U.S. breadth. So we have energy as a buy opportunity here. Again, we understand, and I hope you do too, and you read the real-time alert yesterday, that it gets a little dicier when all stocks are going down. If you're buying energy stocks, obviously they have some beta to them, but they are what they are. And again, you get what you get, you don't get upset. If you're scared to buy things at the low end of the range, you're just not going to be cut out for this. If all you do is buy things after they go up, like people did in July, you're definitely not going to be cut out for this, or you'll be cut out for some big drawdowns in Canadian accent terms. But the volatility-adjusted signaling process rolls on. The top end of the risk range is much higher on oil. It's much higher on nuclear, NLR. It's much higher on uranium, URA. It's much higher on AMLP, which is all these things. I signaled 3 different buys yesterday. I've been waiting on them, and of course we got them, so they're all right there. We do have a long book, obviously, of plenty of ideas, and I just rattled off plenty of that. And it also includes the energy equity ETFs, which will be up next if I get the low end of the range in those. We didn't get the low end of the range in those yesterday. You can see XLE's risk range is in the risk range product. If I get that today, I'll make my decision based on, again, it's going to have some input on what the U.S. equity market's doing. Don't forget, into and out of this bullshit JOLTS report that all the bulls have conveniently tried to get their narrative towards. JOLTS? Like, really? The JOLTS, by the way, report has been downward sloping for quite some time. So, and if it is what they thought that it would be, it'd be bullish for energy anyway, because they want it to be dovish. I talked about this in the early look as well. It's perverse, it's nasty. Brett we'll get to as well. But the bulls really need people to lose their jobs. They need the jobs data to get worse at a faster pace. The bear understands that if and when that happens, that's the end of it. That's when things get really bad. Okay, jobless claims shoot up through 300,000. It's over. There is no bull case. So be careful what you wish for those of you that have friends who aren't watching this because they were on for free when we had the free week, but don't understand what I just said. On interest rates, the bond market understands that inflation data, and by the way, the GDP growth number that's pending, which we're currently hedged at, numbers come down throughout the quarter on GDP, but we're still at north of 3% GDP for Q2, which is going to be reported in Q4. We're at 3.04%, and that's what it is. I mean, the data continues to be hawkish on inflation, and that's why bond yields are busting. Another move intraday here from when I got up this morning. It was around 368. They got back to flat on 10s. Now up to 371. Do I have 372? How about 375, which is the top end of the range for now? And intraday, I wouldn't be surprised if that goes towards 380. So again, if you're long duration, you're getting your ass handed to you. If you're long utilities, which by the way are now trading, I don't know if we have a chart of that. Ethan's on the switch his first time going solo mission here with Maverick. He's in the cockpit. So we got Ethan on the switch. I don't think we have that, by the way. But if you saw what happened to utilities yesterday, you should be very afraid. I mean, if you're not hedged or positioned the way that we are on the short side. Because the last time utilities traded like that was like in 2008 when I was calling that crash. So for a sector style to be down like 4.7% in a day with the S&P quote-unquote flat, and after that sector was down almost 7% in the prior week, that's nasty. Now, it's not as nasty as, for those of you that don't, like, Boomer, my dog, by the way, he's got terrible breath. Like, but we're talking nastier breath, and we brush his teeth, we have like the plaque stuff we put in the food. We're trying to help the Boomer not have the bad breath like that, but he's a big slobbering golden retriever, he's like 100 pounds, and he's just terrible breath, right? But yesterday, the stock market breath was nastier than Boomer's breath, okay? This was awful, okay? Awful. Somebody just said on Twitter, hey, I love the early look note this morning on this, but it'd be good for some of the outsiders who said Keith is the boy who tried Wolf Action. Keith is the guy, the only guy? There's only one person who called every single one of these, which is 2 for 2 now, stock market crashes of 2008, and the one you're seeing in the Russell 2000, which is no longer up year to date. Russell the S&P 500 equal weight is pretty much flat for the year to date. We don't do year to date. We do cycle to date, stupid. So if you call me a wolf crier, I'll call you a wolf that's howling. This wolf is just howling bearish, and that's this bit, right? Okay. 78% of people don't want to do the Russell because it's inconvenient truth. You don't want to do equal weight because that's not good either. Well, why don't we just look at the breadth in the S&P 500? This is a Tier 1 Alpha chart that I cited this morning. It's in their stat pack, what they call their their MBAD indicator. Talk about a good name for something that just went bad. Sometimes it's good. In July it was very good because stocks were all going up. Now you had 78% of stocks were down on the day with the S&P flat. Okay, that's because 7 stocks were up almost 2%. Okay, so we're going to call those officially now. We got a couple new names for them. We're not going to call them the Magnificent Seven. We're going to call them the Magnificently Manipulated Seven, and/or hashtag MM7. Okay, Magnificently Manipulated 7. Now, how did that work? Now, go back to that chart here. It wasn't just that 78% of stocks were down, Josie. The average decline of a stock was 1.7%. And as Tier 1 Alpha is going to write about in their situation report today, that just doesn't happen. I mean, typically on that, the S&P is down, 1.25 to 2% on the day. So that's a major risk now for the bulls because that Titanic's right back on tilt. They basically plowed everyone into those 6. And by the way, there is a they. I'm not a boy crying wolf. I am the wolf. Right? I'm the wolf who can maintain opposing thoughts in his head and understand when this signal has gone that bad, even on their own signals, the moving monkeys have been destroyed. I think there's like 10% of 50-day moving monkeys are intact in the S&P 500. So it's really on tilt. And what I said this morning in the early look wasn't specific enough because I don't know who it was. But think of it. Let's say that you run $1 trillion. And you're running, I'm going to buy some duration at 405 in the 10-year because I think JOLTS matters. Well, you better sell. Let's say you bought, say 10% of your portfolio is in that component of fixed income. That would be actually underweight relative to a 60-40 fund. You just take $100 million and just buy 7 stocks because you cannot wear this drawdown anymore in the bond market. The bond market is crashing. Okay, you can't buy high yield. We're short high yield and jump. We had that question very timely a couple weeks ago, Jonesy, where a subscriber was like, "Well, did you go get anybody?" Well, I don't cry about that either. I mean, this thing has gone straight down since then. And you can't buy high yield, you can't buy jump, you can't buy duration. Unless you have your money where I have my money in fixed income, which is in things that only go up or don't go down, and I get my yield, then you're in a lot of trouble here. So you're looking for liquidity. There is exit liquidity. Don't think that there's not. There's a lot of money sloshing around that, again, is moved pretty quickly, but now that becomes the risk, right? Or wrong. Those are your top 3. End times, one more time. All right. So within all this, we have this government breakdown, right? Have you been watching that? I mean, so there's a great chapter in this, chapter 7, Jonesy, that starts with Nero waking up alone. For those of you that are history buffs, you'd know. They basically left him. They took everything. They even took the box of poison that Nero had beside his bed because he knew eventually they would come for him. He couldn't even hold him. Think about that. Now, we're not talking about that. We're just talking about what you see on the screens. You have rate of change of the economy basically done as of the 3rd quarter. Fourth quarter is the beginning of the recession. You got deficits as far as the eye can see, and the deficit's accelerating into costs to service that debt. Ripping. Whew. So what he says is that states, when they die in a great variety of ways. Some go under bang of violence, and in Nero's case, and others unravel quietly and die with a whimper. I've always said, and I'll say it again, risk happens slowly, then all at once. By the time you get a breakout to 400 over, back to the high yield spread chart, 400 over, at 500, 600 over. There's no stop sign. This isn't watching Atlas Shrugged where you just sit at the bloody thing and don't move, right? Real people move. Okay? So the equivalent of that would be jobless claims, busting the move north of 300,000. It does not stop. So we're at that point. Yeah, manage it if you want. You're doing a good job of that in Hedgeye Nation because I can see the anxiety meter, Ethan, if you got that handy, is right where I want it to be. Pretty balanced. S&P 500 risk range has got 4215. I think that'll print. Actually, the Tier 1 Alpha guys were saying that this 4100 line is now starting to see some pin action on strikes that puts it in play. I don't use round numbers, but I do listen to what they show me in terms of the numbers. I don't listen; I just read the numbers. 4385 is how many more of these famous Jonesy buds are you going to get? Okay. BLHs, and they run in conjunction with what that we highlighted a long time ago. When I put big higher lows, BHLs into an early look like that, like I did on what? What did I do? What are we long? USD. UST bond yields would go higher. What else? Oil. That's where we're at. This is where they're at. They, the crowd, the people that chased, they thought it was a broadening of the rally in July. Dead wrong. Dead wrong. Okay? So again, maybe because I'm the only person that called 2008 and from the top of 2021, I'm the only one that saw the pattern. Maybe it's because I'm the only one with that process. I called it a big lower high back then. I called it the mother of all month-end markups. I've called it the mother of all bubbles. There's no wolf here other than the one that's getting fed. Okay? So this is a real important day. Pay attention. Because that JOLTS thing that they made up is like, watch this. Don't watch this inflation data while oil was going up 40%. No bueno. That didn't work out at all for Powell or his cronies. What else we got going on for you this morning? Looking at the volume yesterday. Still, there's exit liquidity going on, but there's not enough people that have gotten out. We already showed you the sectors. Again, plenty of red out there with utilities and REITs down. REITs were down another 2%. Obviously, energy was the buying opportunity. Again, if you don't like shorting things, you might like it now after it becomes readily apparent that hedging your energy longs would be well done with any of the shorts that we have, which even in commodities, copper is still bearish trend. If you put that on, or steel stocks, for example, there's plenty of ways to hedge your energy longs. Because of course you're going to have anxiety, some of you, if anything doesn't work all the time like it did for 2 months. Well, guess what? Things that go up do correct. We're in the middle of a correction, as I said, in energy, and we'll have to see where I hit the buttons on that. What else we got going on for you this morning? Still, from Tier 1 Alpha data, it's $1.2 billion to hedge per index point. Nasty. Flip line is way higher on Gamma. That's at 44.11. If you don't know what that is, look it up. 78% of stocks. Did I say that? Yeah, I did. I already went through that with the average decline of 1.7%. Move index at 127. The Fed's lost control of the bond market, or the bond market's trying to control the Fed. I don't care how you say it. The fact of the matter is we're on the right side. What else we got going on? In Asia last night, that immediate term trade breakdown line in Japan definitely is ringing the bell. So follow-on selling in Japan. Now, the other big problem in Japan is bond yields. So bond yields, again, it's one thing for bond yields to trade in my risk range. The 10-year yield risk range for JGB 10-year was 70 to 75 basis points. Now it's at 76, 77. That breaks out. That's what's getting people. And then you have the yen set up where, all of Wall Street that's been bearish on the dollar and looking for this yen catalyst are like, please, Mr. Ueda, come out of the coffin and say something positive to defend the yen at 150. So we're right at 150. So on the one hand, our currency shorts playing out beautifully in fractal beauty in all of its nature, but euro and yen. On the other hand, you have a correction in Japan to take advantage of. Now, on that other hand, good news. We actually took down our Japanese exposure. I might get rid of one of the four, but they're pretty close to their minimum if they're not all at their minimum, other than Japanese value. Japanese value, EWJV, is the strongest of the signals on the ETFs in Japan. So if I add to that, that's where I'll be adding to it, because I add to where there's signal strength, I subtract to where signal strength is coming off. We already reminded you that India has more signal strength now by a considerable margin versus Japan if you're looking at them straight up. And of course, our shorts are looking fantastic. We're short EWH, which is Hong Kong. So if Japan's a larger position than my short position in Hong Kong, I also have RSP, IWM, SPY. You can go down the list of all my shorts. We have plenty of shorts. But this was down a lot last night. The Hang Seng Open, the locals in China are not trading stocks because they're still in the golden week, but closed it on the lows, down almost another 3% on the session to new cycle lows. And obviously that can hedge out some of your Japanese immediate term trade risk. What else we got going on? All of Europe. I mean, we're short that. That should be a hedge that you're doing pretty well with. EWO, I covered some of that in real-time alerts yesterday. UAE's been a good long. On the long side, we don't have many equity asset allocation. That's good news, right? I mean, we're not wearing the bags that everybody else is, but we do have what we have, and we're going to talk about those things. But please don't populate the talk about crying wolf. People crying in the queue about things that don't work every single day. UAE's working. I won't get any questions on that, thankfully. Up 2.8% actually in the last month, indeed. Higher low on oil, we got 87.78 the low to the risk range. So again, I hit the button in USO yesterday. On USO, that's different than WTI or Brent for that matter on the risk ranges. It has its own risk range, and I traded accordingly. So just to be clear for those of you that are new to the process, how about that price of beef? Where are you? Look at that. So the dude in Europe this morning wakes up, Jonesy, and he says, ECB guy. The ECB guy says, European Central Bank, we have a problem with the food price. They're calling food what it is, which is a problem. In America, oh, it's great. Inflation's coming down, according to Powell. Bullshit. Where's the beef button? There you go. Talk about orange juice, beef, sugar. What do you want to talk about? I mean, let's just stop talking about bullshit while the bond market blows up your bluff. Okay, so just something to highlight there. Butter yesterday. We're talking about the butter. Who would have thunk? What else? Big high or low on the 10-year yield risk range at 439. Indeed. Already talked about that. FXC. There's one, Jonesy, where it went from bullish for like 2 days back to neutral to bearish. So what did I do? You stop going down. No, I sold the whole thing. Right? Sold. In Macro Pro yesterday. Sold all, it says. Okay. It's bearish trend now. That's what it says. That's what you do. It's called a stop loss. Okay, and I didn't lose a lot on it. That's the point. Lose a little so that you don't lose a lot, and stay with your full investing cycle position. So that'll happen pretty often, Jonesy. Where I should say pretty often. It happened in Vietnam. Oh, look, Vietnam, by the way, now is down almost 10% from where I sold it. So I lost 1.5%, but I could have lost 11.5 or 12%. Okay. Never do I get any thank yous about this, and I don't need to be thanked, right? But the fact of the matter is it's part of the process. Again, taught to me a long time ago by my dad, take little sips, they hurt just as much as the big sips, okay? So, you know, there you go. Take a little loss, but better than a big one. Good spot to take some questions.
Well, I think you can guess this. The number one question, what it's about. But I don't know. I think we already have talked about oil a fair amount, so.
Well, I just like to know what it is.
The entire energy complex from oil tankers to uranium, coal, and beyond collapsed today. What's the thinking?
Have collapsed.
Yes.
See the words, they've collapsed. Okay. I knew we'd eventually get there. I mean, I have a live quote of crude. It's up. Is that collapsing?
Yeah. Maybe talk about.
No, isn't it? We need to go back and change some of this behavior. Anytime something goes down, it doesn't mean it's collapsing. It's correcting. And actually, oil's up. So, I want to improve your ability to succeed at this game. I've thought about this moment a lot. Because some of you are like, he's too mean to me when I ask these questions. No, you're asking stupid fucking questions, right? You're saying, the preface of the question, oil's collapsing. No, it's not. It's up. Oil's up, Keith. You bought some yesterday. That's the way the question should go. Or, hey, how do you think about oil within the context of an economic collapse? That could be a way to think about it. But to start the question that way, I just don't have it in me, right? I can't pretend that there's not enough dollars in the world to pay me to be polite about that. Because it's just a mischaracterization of what's going on, right? What's collapsing are utilities, okay? So, enough of it.
Okay. So you said 78% of stocks were down yesterday. 10% of stocks are above, their moving averages are intact. To what extent?
What did I say was intact?
I think you said only 10% of the moving averages are
Yeah,
intact.
11% of the S&P 500 is 50 days. The stocks are above their 50 days. So even to the moving monkeys, it's getting dangerous.
I think I know the answer to this, but do you ever look at data points like that and think, okay, this is a contrarian indicator, like oversold or whatever?
No.
And I think it's actually a good learning moment for me because I often have looked at this stuff in the past and been like, well, it's at such an extreme now, you've got to balance. But I think something you say a lot is things crash from oversold levels.
Yeah,
which is something you got to keep in mind.
No, I don't look at their indicators, and because their indicators have gone bearish, say that that's a contrarian buy signal because I don't use their indicators to buy or sell.
Yeah.
So no. But what I do is what I've done today, which is I look at all of it, not just the 50-day moving monkey, and I pull out the divergences, which is why it's such a dangerous day, right? So what did I say this morning, Jonesy, right? I said, okay, look, if you look at one IWM, which we're short, minus 1.6%, minus 12%. This is like since August 1st. August 1st, and this is yesterday. Okay? Yes. Yes. Okay, that's 12%. Right? 2. RSP, the equal weight S&P 500, minus 1.1% yesterday. 3. SPY equals 0.0 yesterday because 7 stocks were up plus 2. 7 stocks. Okay? So I look at that, and I look at all that, and I look at my signal on these 7 stocks, and 5 out of the 7, or at least 4 of the big ones, Microsoft and Apple in particular, are bearish trend. So I was shorting Apple yesterday. I can't short Microsoft because Omni covers it. Right? So this is what I do, Jonesy. I start to go deeper into, okay, what are the things that haven't gone down because this is economic gravity.
crash is about to start? And how likely is it? And by the way, in case you're wondering why are we talking about the chart stock markets, why not Bitcoin? Because as you know, what happens to the major stock markets also has a major impact on Bitcoin, crypto as well. Alright guys, join. Alright guys, welcome back. So we've got a lot to talk about in this particular video. We're going to take a look at the stock markets and discuss what is the more likely path for the markets, and again, at what point am I prepared to sell and exit the market if the worst case scenario happens. And before we talk about the markets, there's something quite important I need to mention. As you know, some months ago this year, I was on a holiday abroad in Iran, which was an amazing time. Now, while I was over there, I saw this poor abandoned dog, which you see here is a photo I took. And this poor dog essentially was hungry and had a cancerous growth on its body. It was in a terrible situation. So I quickly called one of my friends who's a vet, and we managed to rescue the dog and take it to a clinic. Fortunately, after giving the dog some food and also treatment with chemotherapy, the dog is actually okay now. In fact, here's a recent video of that same dog, doing quite well. I'm only glad we managed to find him in time. The dog even has a name now. It's called Shere Khan, which means Mr. Lion because of its fur. So why am I telling you all this? A couple of years ago, I asked you if you're okay with me doing sponsored ads in my videos if I donate the money to help the poor or abandoned starving animals. 78% of you said yes, you're okay with that, and I want to thank you for that. So I hope you'll continue to support me in helping these animals, because any money I get from these sponsored videos, I give that to buy food, shelter, and treatment for stray and starving animals like the dog I just talked about. All you have to do is watch this sponsored promotion, and if you like it, if it appeals to you, try it out. Click on the link in the description and see it for yourself. That is all I ask. So let me tell you a little bit about our sponsor, Masterworks. As I'm sure you know, the markets can be volatile and extremely unpredictable, and by that I mean most markets, like stock markets, gold, and Bitcoin. We have already seen big ups and downs this year, Bitcoin, precious metals, and recently in stock markets. As it turns out, fine art is one of the few assets that is not subject to huge volatility. It is relatively more stable. The reason is that art has a low correlation to other major assets. That is why blue chip contemporary art has now outpaced the S&P 500 for the last 27 years by an impressive 106%. Most people completely ignore fine art as an investment because they mistakenly think it's only for the mega rich. That is wrong. Masterworks allows ordinary people, people like you and I, to learn about the art market and invest in shares of art. So when they sell a painting, the net proceeds are passed on to their investors. By the way, Masterworks have sold 16 paintings to date, all of them profitable to investors. Now I want to make it clear, this video is not a recommendation to buy or invest in any asset such as fine art. This video is only for educational purposes, and there are risks, as with any investment. There are other ways to diversify, and we need to be open-minded. As for Masterworks, they have over 300 paintings in their collection, with over 800,000 users. Masterworks remains as the only art platform in the world offering museum-grade blue-chip art. Getting started with Masterworks is very simple. Simply click on the link in the description for priority access. Then just set up an account in a few seconds and browse on. Let me say again, any money we get from sponsors is given to charity, such as helping abandoned animals like the dog we talked about earlier in the video. Alright guys, let's get back to this. We're going to talk about the market. At the beginning of this video, I asked two important questions. Firstly, how likely is it for the stock markets to crash this year and fall into a bear market? Or actually, is it more likely the markets will move towards all-time highs? And the second question was, if the worst case scenario happens, at what point am I prepared to sell and exit the market completely? In other words, how can we know that we're about to start a major crash and fall into a bear market? And also, how likely is that? So let me just begin by saying that, as I'm sure you're aware, if you've been watching my videos and also our member videos, I've been consistently bullish on the market since the beginning of this year. In fact, since January this year, while most analysts out there on YouTube and on social media have been extremely bullish for a major crash at the beginning of this year, I've remained consistently bullish and optimistic for the markets from the beginning of this year. Now, of course, the markets did rally higher as we'd expected from the beginning of this year to July, and in fact, the S&P hit several of our targets. Now, as the markets were rallying towards 4,500, 4,600 in July, I began to warn our members about a potential correction and a drop in the stock markets. In fact, here's a clip. If the S&P should see a much more deeper retracement, which is entirely probable, in other words, if this level does not hold at 493, then that's the next support it's going to be tested, between 4,330 to 4,300. So those are my most likely support levels for the S&P to test in the next several weeks and potentially next few months, taking us to the end of August, probably September. By the way, let me mention again, that's only if the S&P stays below 4,512, 4,012, and breaks down. I want to see confirmation. Again, confirmation is necessary here, especially if the S&P that breaks down below 4,430. down below this level for 4,430, then the odds will start to move down into this region, as I mentioned, 4,325 to 4,270. All right, guys, thanks for watching that. In fact, the S&P has managed to now pull back and drop to the key levels, some of the key regions we talked about in the other videos, and the key support levels. By the way, let me just mention one thing. I'm not trying to tell you that I got every single movement in the market correct. I did not. But overall, in the big picture, I think I got more right than wrong. Now, as I'm making this video right now, the S&P is just hovering around 4,300. So the first question is, am I still bullish on the markets for the remainder of this year? Or do I expect something really bad, like a major crash? So if you saw the title of this video, you're probably thinking that it must be very bearish. That is not the case. As a matter of fact, I still remain bullish for the remainder of this year. And I think the stock markets in the next several months are likely to reach all-time highs. Now, I don't know exactly when they're going to reach all-time highs. It could be by December, or it could be in the next 4 to 6 months. The fact is, I still think it's much more likely for the stock markets to rally higher and move toward the all-time highs. I should add, by the way, that when the stock market, when the S&P reached near 4,600 back in July, it was only 5% away from its all-time highs near 4,818. And as for the full reasons and explanation as to why I remain bullish on the stock market, I've given that in the member video, so make sure you go ahead and watch the member videos. But in any case, that is my view. So let me just repeat one more time. I do not expect a crash or a bear market this year in 2023. I still remain bullish for the remainder of this year. I still think this drop we're seeing in the stock market is a temporary correction before the next major rally issues and starts towards all-time highs in the next several months. Again, probably by the end of December, or if not this year, perhaps by the start of next year. I think it's much more likely for the stock market to continue the uptrend towards all-time highs. Okay, now the question I want to ask is this, and the question you're probably wondering is, well, Alessio, what if you're wrong? So that's the key question. At what point will I be able to say, no, I'm probably wrong about my bullish expectation on the stock market and change my mind and become bearish? So the key question is, at what point will I sell and exit the market in case I'm wrong? So have a look at this chart. This is the chart of the stock market, the S&P here. Notice this nice uptrend line shown in magenta. This is the purple line you see on the chart. A nice uptrend line you can see by connecting those lows going all the way back to October of last year. So clearly we can see on this chart that the stock market remains at the moment in an uptrend. And that in itself is a very simple reason as to why I remain bullish and optimistic with the stock market. And I think as long as the stock market remains above this uptrend line, the odds favor the uptrend to continue. Now notice on my chart there's a red line here. There's a horizontal red line at about 4,200, 4,180. This is actually a very important critical level. If the S&P were to drop and fall below both the trend line, the magenta trend line you see on my chart, and the red line, the horizontal red line about 4,180, then I would have no choice but to change my mind about my bullish expectation for the stock. In other words, if the S&P were to break down below those levels, that important key level, that 4,180 on the chart, that would be the first warning sign, a major warning sign that something is not right in the market, and I would then have to look at a second chart for confirmation. I'll tell you about the second chart in a few minutes. But just to make sure I make this point very clear, as long as the stock market remains above this support level, these support levels above the trend line and above 4,180, I have no reason to be bearish on the stock market. But if the stock market, if the S&P were to break down below both these levels, below the trend line and below 4,180, then that would be a strong warning sign. By the way, in case you're wondering why 4,180, why 4,200, that level, because essentially if the stock market were to drop down into that level below 4,180, it would create an overlap with the previous wave or rally in the market, and the overlap would be a warning sign. Now, the second chart we need to look at for confirmation, and confirmation is very important here. The second chart is the Dow Transportation Index. Now, as I'm sure you know from my previous videos, the Dow Transportation can be a very important and useful leading indicator for the market. In fact, my good friend and trader Manuel Bly at DowTheory.com, he does use the Transportation Index as an important clue for the overall markets. Why? Because transportation is very sensitive to shifts in the economy. So as I'm sure you know, there are two key components in the economy. One is manufacturing stuff, making stuff. The second is shipping stuff or taking stuff. All right, so that's why we need to look at transportation, because it's an important factor in the economy. So let's have a look at the transportation index, the Dow Transportation Index on this chart. If the Dow Transportation Index were to drop below this trend line, notice there's a trend line running through here, an uptrend line, by the way, which is a good sign, by the way, for this chart. If the Dow Transportation Index can remain above this trend line, that's a good sign. However, if, and I want to stress, if the Dow Transportation Index were to break down below both the trend line, the uptrend line, and below this important support level, this horizontal red line on this chart, which is about 14,460, that would be a major red flag. That would not be good. Because if the Dow Transportation Index were to drop and fall below, if it was to make a sustained break at that support level at 14,460, that would be a major red flag. That's something that's not right in the stock markets and perhaps overall in the economy as well. So remember, this important chart is a leading indicator for both the stock markets and the economy. So in other words, guys, answer the question that I asked at the beginning of this video. At what point would I sell and exit the market? Let me just say again, this is unlikely. I'm not expecting this to happen. So I'm not expecting a crash in the bear market scenario. It has a low probability, mind you. Again, I've given full explanations in the member videos. But the fact is, if the Dow Transportation Index were to break down below 14,460, and if the S&P were to break down and close below 4180 on that chart, then if both of those things happen, then I will have no choice but to change my mind and become very bearish on the stock market. Again, let me mention one more time. I don't think that bear market scenario is going to happen. I'm not bearish on the markets. I am not expecting a crash. I remain bullish for the stock markets for the remainder of this year, and I think it's much more likely for the stock markets to rally higher and move towards all-time highs. All I'm saying is that if the stock market, if the S&P were to drop and fall below 4180, and if the Dow Transportation Index were to confirm that to fall below its support level of 14,460, then I would have no choice but to change my mind and become very bearish on the markets and potentially sell and exit the markets. By the way, one important disclaimer. This video is not a recommendation to buy or sell into the stock market or any market. I'm just simply saying this is what I'm going to be doing for myself to manage risk. This is by no means a recommendation. You should do the same thing as me. Alright guys, so I'm just simply letting you know what I'm going to be doing for the next several months and what my expectations are. And let me say again, I could be wrong about my overall expectations.
It's everything you wish.
How do you tell the hardest working pans apart from the rest? We made it easy. Because we know
Only China and the United States have big tech. Europe, Britain, nothing. Zero. We are irrelevant. I know it's very harsh to say that. But Britain and the European Union better understand that these Brexit discussions and all that stuff that has been occupying us now for the last 7 years has rendered us irrelevant without cloud cap.
Hello and welcome to Ways to Change the World. I'm Christian Gilly Murphy, and this is the podcast in which we talk to extraordinary people about the big ideas in their lives and the events that have helped shape them. My guest this week is the Greek economist Yanis Varoufakis. He was briefly in 2015 the Greek finance minister during the height of the debt crisis. He has been involved in electoral politics in his own country. He has campaigned around Brexit and been very involved with the Labour Party in this country. But he recently lost his parliamentary seat himself. He is the author of many books, and his latest is called Techno-Feudalism: What Killed Capitalism. Thank you very much indeed for joining us.
Thank you for having me.
Let's go through this very simply. I mean, first of all, feudalism. By feudalism, I imagine medieval peasants who are effectively forced to live on the land of their lords and masters. They give him a slice of their produce or their
Right.
income, and they are basically bound to him and have no freedom. Is that what you mean by feudalism?
That's what we mean by feudalism, but not by techno-feudalism.
So what is techno-feudalism?
I'm glad you started with feudalism because the great transformation which has created the modern world was the one from feudalism to capitalism. As you correctly put it, feudalism was a socio-economic system predicated upon land and land ownership. So the aristocracy owned the land, it got a lot of economic, social, political power. It was all one thing back then. There was no distinction. But if you had political power, you had economic power, unlike under capitalism. And the wealth was transferred to the ruling class, to the aristocracy, through, as you put it, rent. Taking a slice of the produce, the harvest of the peasants who did not labor for a wage. There was no labor market. You couldn't quit. You didn't receive a wage. You just kept that which the landlord or the sheriff operating on the landlord's behalf would leave behind after the harvest was in. Then you had a fantastic transformation, a great transformation, as Karl Polanyi put it, from feudalism to capitalism. Power shifted from those who owned land to those who owned the machines, the steam engines, the factories, the steamships, the telegraphs, the later on electrical power generating systems. And wealth came from accumulation not of rents, but of profits. So you had commodification of land. Suddenly land became a commodity when the enclosures chucked out of the land the peasants and replaced them with sheep, if you remember, of course you remember. And this is the beginning of the modern world, of modernity as we know it. Now, what am I saying with techno-feudalism? I'm saying that capital triumphed so magnificently that it mutated, it created a mutant version of it, which I call cloud capital. So what is the difference between cloud capital and normal capital? Take an industrial robot. That's traditional capital. It's very snazzy, it's very technologically advanced, it moves its own, it's got electronics in it, software and all that. But it does more or less the same job that the steam engine did. It automates production in the factory. Cloud capital is this network of machines and software which allows us to talk to one another, big tech. My hypothesis is that this new version of capital, cloud capital, is a very different beast from industrial robots and steam engines. And anyone who owns it owns effectively a new form of digital land. Think of Amazon.com. It's like a cloud thief. It It's a thief that lives in the cloud, effectively on the bed of cloud capital, which allows the new lord, Jeff Bezos, or whoever owns that particular piece of digital land, to charge rents. Because Jeff Bezos doesn't produce anything that you buy on Amazon, same with the owners of Alibaba and so on. What they do, however, is they charge 40%. Think about it, 40% is a gigantic rent on the price of everything that is sold to you on Amazon.com. Now, this is not a theoretical point. My point, the point I'm trying to make in the book, is that this is a great transformation which, if you put your mind to it, it explains the reason why we have so much anxiety in the world. We have this polycrisis. The crisis of today is nothing like the crisis of the 1970s, even the cost of living crisis. The inflation we have today bears no resemblance to the inflation that we experienced in the 1970s. You had a period of deflation, period of inflation. You have this gigantic disconnect between the amount of money in the economy. We never had so much money as we have now, globally speaking, across the West, the whole world. And yet, investment is at the lowest level in proportion to how much money there is in the economy. And I do believe the answer lies in this fantastic transformation, very violent transformation of the world from capitalism to something that I call techno-feudalism, which is of course based on enormous quantities of capital, unlike the older version of feudalism that you described.
So there's a lot to unpack there. So
Indeed.
in terms of the analogy of rent, and who are the serfs? Are the serfs all of us, or are they? Who is paying the rent? Is it the makers of the goods that Amazon is selling, or what?
The rents themselves are paid by the capitalists. So if you're producing a bicycle or a book, and you sell it through Amazon, through Alibaba, through a myriad of such platforms, now doing amazing business in Indonesia, in Africa. It's not just a Western phenomenon, right? Of course in China. If you are producing stuff, material goods or services or goods, you sell them through that kind of cloud fee, and you pay rent. For the very first time in the history of humanity, capital is being produced or reproduced by people who are not being paid as wage laborers. So every time you post a review on Amazon, you walk around London or drive around London with your phone, and the phone is pinging Google Maps where you are.
Producing data.
So Google Maps becomes more valuable because it can predict congestion. So you are contributing to the capital of these large conglomerates without being a paid laborer. I call that a cloud serf. Interestingly, when I was researching this book, I discovered that on average, conglomerates of the old capitalist type pay about 80 to 85% of their revenues to workers. Facebook pays 1%. Why? Because Facebook, the capital of Facebook, is produced for free by everybody who creates their own pages, posts messages, and sends reviews to one another, and so on.
But
And
they
this is
would-
all free labor.
Yeah, but they would say this is not labour, this is not people working for us.
It is
This is
work.
people getting a product by choice, no one's forcing them to do it. They are choosing to use the platform that Facebook is, or whichever platform you might be talking about, and they are getting a convenience aspect, they're getting a service from it.
But that's irrelevant. Because true, what people do every day, I did. I couldn't live without my phone, without my TikTok, without my... I'm an addict
Yeah.
as well.
So are they
I
serfs?
volunteer. But voluntary serfdom is the worst kind of serfdom. But anyway, this is not an ethical point. It doesn't matter whether you're forced or you're not forced. The fact is that you're doing a lot of work. All these kids with uploading TikTok videos, they love it. If you took it away from them, they would hate you, especially if you're a parent, as I am. I'm sure you are. But nevertheless, the fact remains, they put a lot of work. They don't think of it as work, but it is work. And it is work that is replenishing the capital stock of TikTok. Now, that from a macro perspective is crucial, because you have capital being reproduced without wage labor. Now, why is it important? Because wage labor means that there are wages that are being paid, and those wages contribute to the demand for things in the marketplace. When you have all this labor producing capital, but it is not remunerated, that shrinks aggregate demand macroeconomically. And what does that mean? It means that central banks cannot get away without printing more money to replenish the demand. But then, especially when you have an inflationary cost of living crisis as we do now, there is a class of objectives. On the one hand, to arrest rising prices, but on the other hand, if you don't print the money, because you have so much work that is not remunerated, then aggregate demand is shrinking. This is why central bankers are in a state of apoplexy. They do not know what to do. They are damned if they do, raise interest rates, and they're damned if they don't. So, this is not a theoretical book, from my perspective. It's an attempt to understand the world we live in, including at the micro level, at the level of our kids. My concern is also a concern that the liberals should have about the concept of the liberal individual, because if you think about it, once upon a time, there was a strict demarcation between work and play and leisure.
And that's gone.
And that is gone. And it is gone because if you're producing capital, even in your sleep, more or less, if you are in a society where, I've been a professor for many years before I got into politics, I noticed that young people now are constantly angst-driven about their social media. Why? Because they know that when they apply for a job, the interview panel will look at their social media. So they are constantly trying to create the self which they think is going to sell in the labor market. Now, this is what being subconsciously involuntarily, but it means that there is no autonomy of the liberal individual. It also means that we can have no social democracy. Social democratic parties are gone.
So you think in reality it is not really possible to opt out of politics and just say, I'm not
It is
doing this.
possible, but you have to become a new Luddite. You've got to switch off the phone, get an old Nokia, you cannot connect to the internet. I know that people want, but it's not an escape route for society. It may be an escape route for the individual, but it can't be an escape route for humanity.
So why is this something that replaces capitalism rather than it's just part of it?
It depends on how you define capitalism. My definition of capitalism is a system that has two pillars. One is markets. Unlike feudalism, when we shifted from feudalism to capitalism, markets did all the work in terms of coordinating human activities. Everything is either sold through the market or purchased at the marketplace. So markets, one pillar of it. The second is profits. What lubricates capitalism, what makes capitalism grow and continue is profit making. If I'm right with my hypothesis in techno-capitalism, both are now gone. They're sideshows. Of course there's profit. The profit motive is everywhere. Of course there are markets everywhere. But they are optional. Jeff Bezos does not make his money out of profits. He collects rents.
Isn't it the same thing?
No. It is exactly the opposite. The reason why capitalism was such a major advancement or such a revolutionary change from feudalism was because of the shift from rents that were collected for no productive effort and for no entrepreneurial activity of the aristocrats to profits. Jeff Bezos is of course a brilliant entrepreneur in creating this digital landscape over which he has monopoly property rights, which he uses to collect rents. So that is macroeconomically very significant because of the depressing effect on aggregate demand, which is then replaced by central bank money. And it's also hugely significant from the perspective of your question. Because if markets have been replaced by these digital fiefdoms, and profits have been replaced by rents, then that's not capitalism anymore. Now, of course, you could say, let's call it platform capitalism or tier capitalism. Would that be wrong? No, it would not be wrong. In the same way that it wouldn't be wrong for Adam Smith not to refer to the new capitalist system as capitalist, Could refer to it as an industrial profit-driven feudalism. By dropping the word feudalism in the early 19th century, intellectuals, especially in Britain at the time, helped us understand that this was a big thing. It was a great transformation. And that's what I'm trying to do. I'm trying to alert people to the fact that we have a very different world now, where the laws of society that prevailed before 2010, 2015, 2020 no longer prevail. And this is why central banks, that's why governments, that's why world leaders, that's why globalization is now in tatters.
So I mean, it's easy to understand the analogy when you look at Amazon or it's a bit harder, I suppose, when you start looking at X or Facebook to understand, quite the same analogy, or even car companies, because ultimately, isn't a car company like Tesla or any other electric car company, a data-driven car company, just a product you can buy and use? It's got a data element to its value, but isn't it actually just kind of the same old thing?
No. What's the difference between Tesla and Volkswagen? Volkswagen are now the mighty German company. They are shifting towards electric cars. So one might be Volkswagen, right? So Volkswagen has copied Tesla and it's another Tesla. It ain't. Why? Because there's no cloud capital in Germany. Volkswagen has no access to cloud capital. Where do you think Elon Musk bought Twitter alternately to Gates? Tesla's increasingly, like all electric cars, BYDs from China and so on, the value added, the surpluses, the profits, the money of producing these things is increasingly going to shift from fine engineering, because electric cars don't have that much engineering involved in it, right? To the cloud company. Volkswagen doesn't have access to that. That is why the German business model is collapsing. That is why the Germans themselves, the German investors themselves, are in a state of panic. Because they know that even if they just copy Tesla completely and create a Tesla, they would not, Germany has failed. Only China and the United States have big tech. Europe, Britain, nothing. Zero. We are irrelevant. I know it's very harsh to say that. But Britain and the European Union better understand that these Brexit discussions and all that stuff that has been occupying us now for the last 7 years has rendered us irrelevant without doubt.
So what is the sort of the democratic response, or what is the right response?
Let me tell you what I don't think the solution is. Social democracy cannot do it. So a social democratic solution is bad. We need to socialize cloud capital. Cloud capital must be socialized. In other words, it must belong to the people who actually produce it. Jeff Bezos is not the one who's producing it.
How?
Let me give you a couple of examples, because this is a very, very long conversation. So imagine that we changed corporate law such that every employee gets one share the moment they are employed. Shares cannot be traded, and they cannot be leased. So in the same way that you have one vote during an election, political election, whether it's local government or national government, or parliament election, you cannot trade it, you cannot lease it. Like a student card when you enter university. You get it courtesy of being a worker, an employee.
So the value doesn't go up or down because it cannot be traded.
It can't be traded, but it gives you a vote. And you can vote on any number, like you are a member, an equal member of the shareholders' communion. Imagine how that would change the world.
A real shareholder democracy.
It's a real shareholder. Exactly. So democracy is extended to the corporation. Doesn't mean that the state has taken over. It's a completely market-based system. Still, except you drop two markets. The two really problematic markets under capitalism and anarcho-capitalism. The share market, because you can buy and sell shares, so it goes. Don't even need to buy a car, it simply shrivels and dies. And secondly, the labor market. Because suddenly there's no difference between being a worker and being an owner. So there's no difference between profit and wages. So yeah, I worked for a company like that in Washington State, in the United States, 10 years ago. It was fascinating to watch it work. a very successful company comprising 350 employees with $1.2 billion turnover a year. So it's not this. I'm not talking about some kind of Robert Owen commune in the 19th century Victorian era.
Well, I mean, okay, so but suppose let's sort of jump all the steps that were required to get you there, you know, whether it was a revolution or whatever it might be that might get you there. Do you honestly think that most people would want to take those sorts of decisions around the companies that they work for?
Yes, absolutely. People love to feel that they have the right.
Because most business decisions are quite complex. You know, they're not
Sure. But you see, that's why that experience of mine, that company, was important, because it wasn't compulsory to participate in every vote. I mean, it would be very inefficient if everybody voted on everything. Because, you know, there are some things you don't know much about and some other things you don't care about. So why should you vote on those? But the way we were doing it was that, you know, you had the right to vote. There was a social contract, an implicit convention, a kind, you know, of ethical standard amongst us that you would only vote for things that you put some work into becoming informed about. You had permanent access to intranet meetings when, for instance, I wanted to employ a graphic design. So in the context of this horizontal decision making, I put out a message to colleagues and said, you know, who thinks we should employ another graphic designer, an extra one, and who wants to form a search committee with me? And 3 or 4 people did. And then we interviewed people, and it was video streamed, live streamed, for anybody who cared to find out how these candidates were doing. And the idea was that at the end of the day, when those interviews were finished, those who actually participated in the process, even simply by watching the interviews, would vote, and the rest would abstain if they hadn't had the opportunity to form an opinion. It actually worked really very nicely, and that way, you know, people feel motivated to participate where they think they can help. And it is a far better management system than the top-down thing.
I mean, let's talk about your own experience of politics and elected politics. I mean, we should really just start in 2015 briefly. I mean, you know, in terms of sort of, you suddenly have this huge amount of power in a sort of a crisis government. Seemingly,
No, I was the most powerless politician in the history of Europe. Because remember, I was the finance minister of the most bankrupt state in the world. So that the only power you have is the power to veto. To veto loans that are being thrown your way. Why were they thrown our way, given that we were bankrupt? To cover up our bankruptcy. Because the European Union did not want to admit to the fact that the member state of the Eurozone could go bankrupt. And because they didn't want the bankers to lose property rights over the banks, which went bankrupt on their watch. So it was like, you know, imagine you're walking down the street and there's a gang of thugs approaching you, and you only have one weapon, but it happens to be a nuclear bomb. That's how it felt.
But when you look back at your own appointments to that position, do you think it was? Do you think it was kind of wrong? You know, that was it sort of crony democracy in a way? You know, did you get this job because you were friends with?
No, exactly the opposite. The one thing I'm proud of was that this was not one of those cases. I was not a politician. I had become known because I was warning Greek governments without wanting ever to be political. I was warning that Greece had gone bankrupt. Please, do not make the mistake of thinking that the solution is another huge loan on conditions of austerity that will deplete further our capacity to repay our debts. So I was elected because at some point the people of Greece had enough of this extended spending, of one loan coming after the next, cover up our bankruptcy under conditions that were destroying the lives of 90% of the population and sending 1 million, 10% of the population, the young and the best educated, abroad to migrate to London School. So that was a brief moment when democracy worked. I'm not saying this because I was the one that was elected, but because I think that it is clear that the system, the media star system, loathed me. the powers that be generally did not like my message. They don't like the finance minister saying that we're bankrupt and it's a brace of bankruptcy instead of pretending that we can cover it up to the loans. And I knew it was going to be a massive struggle. I thought there was a chance, 20 to 30% probability of success, if we stuck together. And by that I mean if the Prime Minister and I stuck together. The Prime Minister and I didn't stick together because our opponents, creditors who were insisting on more predatory loans, managed to drive a wedge between us. And in the end, they won him over, and he decided to surrender and take the loan, and I left.
What do you think has sort of gone wrong more recently, in terms of sort of electoral politics? You know, you tried to sort of start a movement. It it's just largely been rejected.
Yes, absolutely.
Why?
We are the great losers. But both Tsipras, my former comrade and Prime Minister, and I, we are both the big losers. This reason is, I think, quite straightforward. When it comes to these matters, I think the simplest explanation is the best. It's Occam's razor. In 2015, we managed to convince 62% of the population, who were not left-wing, to believe us, to rise up against every television channel, every oligarchic Rupert Murdoch-like newspaper, all the banks, the European Central Bank, the International Monetary Fund, the European Commission, the whole system. The people, 62% of the population, backed us. We raised their expectations that we would be able to deliver them from this permanent debt bondage. And we failed. We failed. Voters out there, after a while, don't care who's positive. At some point they said, go. You made us hope. That hope was betrayed. We don't care how and why. Go away. We go back to the sad politics of voting for the political leader or the party that will perpetuate our debt bondage, but at least it will give us something, because we don't want to think about crisis anymore. The reason why our party, Merit 25, my party, tanked was because we kept trying to tell people what we thought was the truth.
So do you think that, because we talk a lot about the need for truth in politics
Yes.
now, especially after the era of the populists.
What do you offer people, truth or hope?
Well, the question is, are you basically saying people can't handle the truth?
No, people had enough. People who rose up, trusted you, gave you 62% of the vote, and so nothing will come out of this. They say, please go away. We know what the truth is. They don't want lies. They just don't want to hear from you, especially after you've been spat out by the system, to keep telling them things which they know to be true, which are painful, but which do not lead to the answer, so what do we do tomorrow?
Do you think that's why Labour doesn't talk about going back into the European Union?
My view of this Labour Party is rather dim and grim. Keir Starmer has zero credibility with anyone. He ran
He's the head
under
of
the
the
banner
polls.
of Jeremy Corbyn, supposedly trying to make Jeremy, who's a personal friend of mine, full disclosure, Prime Minister. Then he ran for the leadership of the Labour Party, saying that he will retain the 2019 manifesto intact and he will fight for its implementation. Then he ditches that manifesto. He promises that he's not going to revisit Brexit. Now he talks about effectively the Norway solution, bringing Britain back to the single market. By the way, I
Actually,
campaigned.
he says that's not an option. He says that's not even, there's no case for it.
He said, but at the same time, he says that he's going to maintain the alignment with the single market. Why would you ever do that unless you
matter whether you find him trustworthy or credible or whatever. He's probably going to be in power.
Of course it doesn't matter what I think. But you know,
But that analysis doesn't
I'm quite
analysis
happy with
matter.
that. No, but you see, it doesn't matter whether he becomes prime minister or not, because he's going. I was.
He's not going to have power anyway. is what
He's
you're
not
saying.
going to have power. He doesn't have. He doesn't have a spine either. So Sunak is spineless. Look at HS2. I mean, it's pathetic now that they're talking about stopping it at Birmingham. Next thing they will stop it at Watford, right? You might as well not do it if you're not going to do it. And so he's spineless. He's crumbling under the pressure, the budget pressure. But so is Keir Starmer. If you can't come up with credible policies that you will stick to, unless something cataclysmic takes place, then it really doesn't matter whether Sunak or Keir Starmer is in power. This is the greatest defeat of democracy. It doesn't matter whether Sunak or Starmer is in power.
So let's
Because they're
come,
not in power anyway, they're in government.
so let's come back to techno-feudalism then. I mean, you've cited some examples of AI as very exciting. So what does AI do to techno-feudalism? Does it sort of eat it? Or do the sort of the feudal kings of the techno world?
Remember, artificial intelligence was not born yesterday. The algorithms that allowed Google to search the net for their species of artificial intelligence. Now what we have is these large language models which take AI to a higher level. But cloud capital is based on artificial intelligence. So it's one thing, it's not something else, which is it's part of techno-feudalism. It's simply turbocharging techno-feudalism. But so that this is not too abstract a conversation, let me give you a vision of how I would like cloud capital to work. Imagine you wanted to hail a cab or to go somewhere in London. Right? Now you have to use Uber or Lyft or one of those companies, which essentially uses you as a cloud server because it uses your data, and then it exploits proletarian labor for driving for pittance. Now imagine if you owned your own digital identity, which you don't. The moment you on the internet, you need either your bank or Google, who use your credit card in order to state to the rest of the internet users that you are who you say you are. But if you owned your digital identity, this was offered to you by the state. The state gave you a digital ID, which identified you in the digital world, in cyberspace. And you were going to stand outside Channel 4 and say, look, I want to go to Fulham Broadway. Who wants to bid for it? And you had countless different outfits, all corps, working with, their own AI bots. Even public transport. You get a message saying, you idiot, the tube is next door. It's faster for you to use it. And you choose, which outfit will take you to Fulham Broadway. That is very similar to what we're doing now, but it is a world apart from an economic point of view, from an ethical point of view, from a sociological point of view to what we have.
If you could change the world then, in any way, how would you change it?
I think that two things are absolutely crucial. One is to democratize the workplace in the way that we discussed before. One person, one share, one vote. And the second is for our central bank, the Bank of England in this country, to provide everyone with a free digital account with a PIN number, and then let Barclays and Lloyds find reasons to exist by offering you services other than the payment system. These two moves would really revolutionize the world we live in. They sound like relatively small moves, but the world we live in would not look the same if they were made.
Yanis Varoufakis, thank you very much indeed for your time.
Thank you.
And then I switched to Liberty Mutual and saved hundreds. I know. Oh, no, no. Texas representative carjacked at gunpoint in Washington, D.C. We're learning more details about what happened to Democrat Henry Cuellar, the congressman from South Texas. Dominique Newland Jones is now live in studio with more. Dominique?
Rob, good morning. Now this story, it's developing from overnight, but here's the details I can share with you this morning regarding Representative Cuellar's carjacking. Now, according to the Metropolitan Police Department, this happened at around 9:30 last night in the Navy Yard in D.C. Cuellar's chief of staff says he was parking his car when three men approached the congressman dressed in all black. They stole his car along with his dinner, phone, and an iPad. The congressman's office says he was not hurt and is working with police. Now, as of Monday, there were 750 carjackings in D.C., and 75% of those involved guns, according to D.C. police. According also to D.C.'s police crime stats, motor vehicle theft up 106% this year compared to the same time in 2022. Now, this investigation, of course, still in its early stages, and officials working on the case have not released any details about any kind of motive. Congressman Cuellar's vehicle has been recovered and no arrests have been made.
What I'm going to do is to talk a little bit about the international system, about what we've called global hotspots, and